Welcome back to another Forex analysis video for the upcoming week. The first pair we have today is the British pound versus the Australian dollar. We can see that the prices of this pair has been in a consolidation phase for quite some time now. Now, if we move down to the 1 hour time frame, we can spot that there is a formation of a bearish flag and pole pattern. We can spot it right here. To see it more clearly, we can go down to the 15-minute time frame. Just give me a second. Now on a 15-minute time frame, we can see that there is the consolidation phase, also the flag phase of the flag and pole pattern. If we just mark it down in a very narrow range. Now what we can do is, as soon as the market opens and we get a candle closer around this point with good volumes, we can go short and take 1:1.5 as our risk to reward, the minimum risk to reward ratio, with our stop loss being above the last swing high, and our ultimate target should be this range low. The next pair we have today is the Australian dollar versus the Canadian dollar. So here we can see two things. This trend line, the trend line of the ascending triangle pattern, has been tested multiple times, so it has become pretty weak by now. But at the same time, we can see that in the last trading session, we got a double top pattern right here, and after that the price took a rejection, and this is our neckline. So this neckline is pretty significant, since price also took some support from it and then it took resistance. So we can pretend that this line is a pretty strong one. So as soon as the market opens and the prices go down below the swing, we can short it, and our first target should be this range. Rather, we can book half profit at this range, and our stop loss should be above this trend line. We should try to get another target of at least in this zone, and our ultimate target should be this range low. At the same time, if the prices reverse from here and we get a breakout above this point, we can buy. We can go long above this point, and our first target should be this range, and our stop losses should be the swing low wherever it is, and our ultimate target should be around this zone. The next pair we have today is the New Zealand dollar versus the Swiss franc. It has been forming ascending triangle pattern but on a downtrend, so I will be biased on selling it. So as soon as we get so there will be two possibilities actually. As soon as we get a candle closing below this point, we can go short. Sorry for that. We can go short around this zone, and our stop losses should be the last candle high or any significant point above there, and our first target should be at least 1:1.5 risk to reward ratio, but our subsequent target should be this swing lows. We can get a ultimate target around this zone, which can further fall since it's on a downtrend. But at the same time, another possibility which I'm looking forward is, if the prices go back from here, let me just mark it up. If the prices go back up here and then it takes a rejection from this zone, we can short it directly here. This will be the best entry possible. We can short it directly here, and our stop loss should be around this zone, and our first target should be this zone low, and our subsequent target should be those subsequent swing lows. And the last pair we have today is the Australian dollar versus the US dollar. Here we can see a pretty significant thing. So the prices of this, if I move to the 4-hour time frames, it will be easier for us. The price has been on a downtrend, and currently it has been forming a falling wedge pattern. Now the falling wedge pattern is generally known for breakouts in the bullish direction, but here I can see at least two possibilities. Since if I slap down a 200 EMA, we can get a small range right here. So give me just a minute to mark that range. We can get a very small range right here. So if we trade around this range, if it gives a breakdown below this range along with breaking this 200 EMA, we can just go short, and our stop loss should be above this trend line, and our first target should be around this zone. It will secure us around 1:2 risk to reward ratio, and our ultimate target should be this lower levels. that will give us around 4.5 risk to reward ratio. But at the same time, if it gives a breakout and crosses this zone, then we can go long from that point, and our target should be below this 200 EMA, and our targets and our stop loss should be below this 200 EMA, sorry, and our target should be the subsequent swing highs until our trailing stop loss is hit. So that will be all for this week. Thank you.